Hey traders, this is Blake Morrow with Trader Summit, and I have Mr. Dick Matthews with us from Pardus FX. How are you, Richard?
I'm pretty good. I'm very red in the face, been sitting in the sun today, amazingly, in this country. And or maybe it's just anger at the Bank of England. I'm not sure, doing my blood pressure in.
Well, speaking of Bank of England, you thought there might be a little bit of movement there. The sterling actually came under some pressure. What do you think that was?
Well, so you've got two idiots on the Monetary Policy Committee who thought you should leave interest rates where they were, basically. I mean, how they can think that. Yeah, you've got food price inflation came out today. Whoopee, it's down to 17.1% from 17.2%. I mean, woo, that's real good move. And some interesting figures came out, and it's just unbelievable to me. Four onions, we buy them in threes and fours in this country, but four onions cost 65 pence a year ago. They're now £1.24. Yeah, over 90% increase. Frankfurters, if you like Frankfurters, have gone from 125 to £2.42, 93% rise. Yogurt has doubled. I mean, it's just unreal. And the Bank of England sits there and goes, "Oh, we'll raise interest rates by 0.25%. That will cure it." You know, idiots.
Well, what happens when you have high inflation or steady or persistent or annoyingly persistent inflation, but you have slower growth?
Yeah, you get that old stagflation coming
So
out.
we were having this conversation just before we hit the record button. You feel
Yeah.
that the UK is going to be in a stagflation type of environment. What does that mean for, well, what does that mean for people just in general? What does that also mean for the pound sterling? And what does it mean for the Bank of England? So let's start with like stagflation. Why is it here? And how are you as somebody in the UK, how are you going to feel it?
Well, yeah, basically it means that you've got no economic growth. I mean, there's a tiny bit of economic growth. And every time they release GDP figures, there's some extraordinary excuse for why they're bad. I think last time it was for rain. The time before that was a funeral. This time it'll probably, next month, it'll probably be King Charles's coronation. You know, I mean, every excuse under the sun. The bottom line is we've got the growth of an asthmatic snail. We're racing along so fast, it's pathetic. So you've got no growth, but you've got inflation going on. You know, pay rises are still going on at 7% in the private sector. You've got a lot of people still on strike over here. I mean, I've read a number that we've lost 500,000 days, work days in the last 3 months. Two strikes, not inconsiderable. So that doesn't help the general feeling. Although I will say that when I was a lad in my first year in the market, there were 24 million days lost to strikes in that first year.
Wow.
Into some sort of context. So you've got inflation still out of control. You've got an economy that's flatlining, is basically dead. And the Bank of England really has got to do something about inflation. They can trade all they want and, you know, great. It's coming down in the States. And I still think America's got a problem. I think Europe's still got a problem. I think you're ahead of the game. Bank of England were really slow getting into this or actually reactive rather than being proactive. And they've got to keep on hiking rates. And they're already, you know, they're just looking for any excuse not to. And that's what worries me. So all I can say is, and I've been moderately bullish of sterling for the last few weeks. I thought it was going to break up. It's now dipped back down. Look, just before I came on, just below 125.
Yep.
You know, it's had a rally. It's failed. It looks tired. I could see that sort of starting to slip back down towards the mid 120s, maybe 123 something. And also, I think against the euro, it's where it's really vulnerable.
I'm sorry, you said the euro, you expect what?
So I think that sterling against the euro is where it's really vulnerable. So I think the ECB are nailed onto hike rates again.
So you would expect a higher euro sterling exchange rate. Got it. And you know that pair had been a little bit broken down as we broke through the 87 or 88 pence. I'm sorry, it was 87. I'm looking at it right now, 87.20 pence level. But it looks like it pops above the 87.50. You're probably going to head a little bit higher, I would guess.
Yeah, I think so. I mean, I think that the ECB are actually talking pretty tough at the moment.
Okay.
And I guess in a way we're still looking at interest rate differentials and the central banks and how they're playing out and how they're reacting to the public. And the Bank of England's just sat there with its head in the sand.
I see. Now let me ask you this. So regarding the UK and regarding a stagflationary type of environment, what is the Bank of England to do? I mean, how do they combat this? Do they finally step up and raise rates more aggressively, or do they try to, allow for some growth and maybe even keep rates unchanged, maybe even I mean, what do they do? What does the Bank of England do in this situation?
Funnily enough, I think that Truss and Kwarteng got the market or got the policies quite right back in September, October last year, and they were derided for going for growth. At the time, it looked a gamble. I think they probably should have done it. The other problem, before I come back on that, another problem we've got the highest tax burden since 1945 on the population. There's been a slight change in the way taxes are collected here, and it hits a lot of new people being sucked into paying taxes, which again dampens demand a bit. I still think they should be raising interest rates by maybe another % and just give everyone a shock and go, gosh, damn, bite the bullet. We'll slow the economy down and then start to rebuild, try and do something. But at the moment, there just seems to be no policies. And it's interesting. We've got a general election here in about 18 months' time. And both parties are already arguing about their policies for the back end of next year. Well, don't worry about that. You worry about now. Let's get under control. Because actually, 17% is a serious number when you go into a supermarket, and it really, really hurts all and sundry. And inflation just doesn't go away. It just doesn't magic away. I think it's quite sticky in the States. I think it's sticky in Europe. And I think actually, I as you know, I still think the Fed will raise rates again before they cut.
All right. Well, let's see if they follow the way of the RBA. Talking about the U.S., we're facing a debt ceiling. We're counting down the days. Well, I don't know who's counting down the days, but we're running out of days. Let's just put it that way. You have any thoughts on the U.S. debt ceiling? Does it still get raised? How are you going to position yourself? How do you see the dollar?
I think there's a risk in the debt ceiling negotiations. And most of us are pretty used to debt ceiling going on, and they argue, one side argues, the other side's arguing, in the end they all come to an agreement. It does actually look pretty bitter this time. Biden's off to the G7 at the end of the week, so that's going to lose another few days, and the clock is ticking. My fear is that it's brinkmanship, and both sides are going to go right to the edge, and then they'll do a deal. The fear is that they actually go right to the edge and they fall over it, and they at the last minute they don't get a deal, and they accidentally almost fall into default, and all hell is let loose. You see market panic, America's defaulting. Oh my God, what do we do? What do we do? Markets, all equities, everything would collapse before it would bounce back very quickly, because America will come to their senses and agree something. So that to me is the risk on the debt ceiling. It's an out of the money put play, way out of the money put play. But I think there is a little risk there. And volatility is so low at the moment. It's just makes me think a bit like the Titanic. It's going along nicely. Everything, the sea's flat and everything is wonderful, and there's something lurking there. So I'd be very, very nervous of that. Conversely, I still like the dollar, because I think you're going to be in a risk-off environment. And it seems a really strange thing to say that I like the dollar when you think you're going to get a default. But I think fundamentally the dollar is looking okay. It's back up on the dollar index, isn't it? It's bounced back.
Yeah. The dollar index is bounced back. The euros, slipped back below 109. So it looks like that the dollar could pick up a little bit of steam. But you say conversely, you'd want to buy the dollar. It's you almost should say perversely you would be wanting to buy
yeah. I think that's right. So what do you think on the debt ceiling?
Well, as an American, I think that they are going to eventually come to this conclusion that they need to. They understand what the risks are, and I'm in the same camp as you, is that they will probably push it to the very end. The problem with these two sides, Republican, Democrat, they are so far away from each other, and
Yeah.
there just seems to be no room to move and try to find some middle ground. And politics is so polarizing, this and so contentious right now, that I wouldn't be surprised to see both sides push the U.S. economy to our detriment, over the edge, to blame one another for the next the next presidential campaign, which is likely going to be President Trump and President Biden, who neither one of them, you could probably argue, should be in the race whatsoever. So it's going to be really, this is the scariest I think I've seen it as a participant in the markets for the last 25 years. This is the one time where I'm really questioning whether something does get done in the nick of time. So there's my 2 cents.
Yeah, well, I agree with you. I am pretty contemptuous of politicians in America at the moment. I'm with all due respect, and I just don't think they really understand the damage they could do to the market,
and to the credibility of the United States. And yeah, so when you say you'd want to buy dollars, I'm not so sure I'm in that camp. I'm not so sure I'd really want to own dollars, but maybe it'd be against certain currencies. I don't think it's a one. I've said this in the past on many interviews. It's not a one size fits all. So you buy the dollar against the Australian dollar. You maybe sell the dollar against the yen or the euro. So it's, and the Swiss, I don't think it's blindly buying the dollar or selling the dollar one way or the other.
Yeah, I do like the yen and the Swissy. I just think the safe haven plays, and I've got a funny feeling that the yen's going to do something just really bizarre, that Ueder's going to put his stamp on the market and come out and just shock the market somehow.
Do you think it could happen at some point? We'll see. But I think most people that trade the yen have to be shown the way, rather than assume that it's going to happen at this stage.
Yeah, absolutely.
All right. Well, guys and gals, if you have any more to add to this conversation, jump in the comments down below. Let Mr. Matthews know how you feel about some of these topics, especially stagflation in the UK. I can almost see that as a song from The Clash, as on a comeback tour. So stagflation in the UK. I see it now. I can almost hear it now. Anyway, I want to say thanks for joining us, as always, every week here on the Traders Summit. And make sure you guys give Mr. Matthews a thumbs up, and we'll talk to you next week.
Have a good one. Cheers now. Bye-bye.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.